Welcome to Dukascopy TV with me, Alex Izat. Service PMI data has been released this morning. It shows the index points have gone up by just over 2%, reaching 60.50 index points, a real positive for the economy. This 10-month high is a sharp contrast to the Eurozone, which is grounded to a halt. However, the UK still has its issues, as Jack Meaning, Research Fellow at the National Institute of Economic and Social Research, will tell us. Jack, what is behind the rise in PMI data? Is it time for the UK to relax a little?
Okay, well, the key thing here is that this PMI data is part of a broader trend of positive data that we've been seeing in the UK for quite a while. So, the main cause is that demand has kind of become resurgently strong as householders and businesses have become increasingly confident that the recovery is not going anywhere, it's here to stay. Add to that the fact that we've got interest rates at kind of historic lows, incentivizing people to spend and not borrow, and you get this kind of strong demand effect, which is giving confidence to businesses themselves. There were some tentative signs from the data today, actually, that activity is beginning to find its limits as capacity constraints were highlighted, but in general, it seems that confidence is still pretty high.
Has the UK become dependent on domestically oriented services? Should it focus on construction and manufacturing to encourage growth?
Well, so manufacturing and construction are relatively small parts of the UK economy when you look at them in respect to services. So they make up kind of roughly just under 20% with the two of them combined. So there's definitely room for them to expand, but they will have a much smaller impact than expansion in the services sector. So we'd have to take that into account, and we need to see strong expansions for them to have a big impact on the overall numbers. If you look at the composite PMI, for instance, even though on Monday we saw slightly sketchy numbers in the manufacturing sector, the composite PMI has been lifted up off the back of today's services numbers. In general, construction would be a very beneficial place for us to start seeing growth, especially with the housing market as it is. We're seeing the data that came out yesterday showed that we've really seen a pickup in the last 12 months in the construction sector already. So the key is not so much if we can get into that as, keeping that going. In terms of the domestic and internal balance with international trade, well, we do need to push exports, but this is going to be reasonably hard at a time when demand in most of our trading partners is subdued. So if you look at the Eurozone, demand coming from there is going to be subdued for the foreseeable future. If we do want to see a significant shift in export growth, then we're probably going to have to start looking at kind of changing the pattern and moving to different international markets, and that's going to take time.
Do you think the Bank of England will make a stance on the interest rate?
Well, so we saw for the first time at the last meeting that two members already voted for interest rates to go up, so we know that the rate rise is coming. There's been a fair amount of confusion about the exact time of the first interest rate rise, whether it's going to happen this side of the new year or early into the next. But actually, the bank's already taken a firm stance on the medium term, saying that whenever that first rate rise comes, the subsequent increases will be slow and gradual. So markets seem to believe this if you look at the rates and the implied path of rates. So, adding with that to adding to that the weak wage growth that we've seen and the kind of poor productivity the UK is still experiencing, we're definitely not expecting a rate rise until kind of February next year, especially considering that there's going to be deflationary pressure coming from the Eurozone for quite a while.
Geopolitics aside, could there be a positive future for the UK's economy?
Yes, on the whole, the outlook looks quite positive. So the signs seem to be that growth for the second half of this year is going to be broadly in line with growth for the first half, which was very strong. The real issue is going to be whether this will feed into people's living standards and when this will start feeding into people's living standards. So real wages have been incredibly weak since the crisis, and this won't change until productivity picks up. Now, the reasons for the weak productivity we've been having in the UK are still up for debate, but we're going to need to see that before the recovery can really start affecting people's lives on a daily basis.
Thanks, Jack. Keep watching Dukascopy TV for more news on the UK economy and the market as a whole. Until then, goodbye.